Welcome to another exciting episode from Propfirm Trades, where we teach you how to trade online and will help you spot entries so that you can have a profitable trading journey. So today we want to analyze GBPJPY. So when we're doing our analysis, first of all, you want to look at the market structure. You want to analyze the market and see where price is heading and see how your market is behaving, whether we're having a trending market, whether we have a ranging market, or it's just a choppy market. So from just looking at this structure, you can see that the market is trending. How do we see that the market is trending? The market is having higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So if you see that the market is trending, you'd want to see which direction is trending to. In this case, the market is trending up. So we want to draw a trend line. Look for your first touch point, and our second and third touch points are these points right here. I didn't use this line here, because I want to look at places where I have more touch points than just two, at least two or three. If you have two, it's okay, but at least two or three. And at this juncture, I have the first touch point here, the second touch point there, and immediately the third touch point there. So that's what I want to use for us to draw our trend line. So that's your first touch point, second and third, so that you can see that the market is trending up. So the next thing that we'd want to do is mark obvious support and resistance zones, where price came and turned in the market. It's just obvious. You can see from the peaks that you're seeing, that's where you'll see. So this one is our first peak, and I saw that price hit this point, came down and came back to retest this point again. So this is where we'll draw our support and resistance. So the next thing that you want to look for, since we are in a buying zone right now, you want to look for obvious places like order blocks or demand zones where price is most likely to come back and retest. So before you spot where you'd want to enter, just look at what price was doing the previous order blocks. An order block is the last candlestick that you see before price went up or before price went down, before a high movement of price. The last candlestick that's there, like this one right here. So we want to mark our order blocks. This place. That's your order block. As you can see on this candlestick, this bearish candlestick, this is the last candlestick that was there before this price went up, and price normally comes back to retest an order block, like you saw in this case, like you're saying in this case. Price then came down and retested this order block. So where will your entry be? Your entry will be just at this start of this order block. And where will your stop loss be? Your stop loss will be just below this zone, just below where this candlestick, where this wick is, which is right here. This will be your stop loss. And where will your take profit be? At the highest point, highest peak that was reached by the price before it turned, which is this place right here. This will be your take profit. So let me delete these lines because they were just for demonstration, for us to see how we mark our order blocks. Maybe let me leave this order block there. So now this was our order block for this part. When price came here, we expected it to retest this order block, and it did. So at times price might not retest that order block, so you have to be practicing proper risk management, have your stop loss in order, and be able to see that you do not blow your account. So after price came back to retest the order block, it came up and it broke the structure It broke the structure right here. Price broke the structure right here and created a new higher high. So after price broke the structure, we're expecting that price comes back to retest this order block right here. So which was the last candle? This was the last candle. This is our order block that we will use for us to see that price will come back and test this order block. So you'd want to mark that order block in preparation for the price to come back. So with this order block, I won't put my price here because it's this week right here. So let me just cover all so that so this is how you mark your order block. Oops, that's a naughty one right there. Okay, just wanted to reach the bottom part of this week. So after price broke the structure right here and created a new high, we are expecting for price to still gravitate back and retest this order block before it heads up. That is, if price hasn't changed direction in its movement. So this is the order block that we're expecting price to reach to. And yes, price did come back and retest this order block before it went up. So your entry will be at this level where the order block began, and then your stop loss will just be below the last week, just below the lower week right here. This is where you'd put your stop loss. So your take profit as well after you get in at this point will be the highest point reached by this higher high. This is where your take profit would be. So you'd experience all this price movement and win some. So let me remove that so that our analysis is clear, so that we do not have too many lines on our chart. So when price broke here, this place, we expect it to come back to an order block. So which one is our order block? Can you spot it before I draw it? Yes, if you said it's this zone right here, you are pretty right. That's your order block. This time it's a big one. In terms of you doing your stop loss, you'd want to find interest maybe in the lower time frames, because this would be your entry point right there, and your stop loss will be below the lower week, just here. This is where your stop loss would be, and lo and behold, price did come back to retest this order block and it went up. Your take profit will be this zone here. This will be your take profit at this level right here, the highest point reached by the price in the previous higher high. So enough about this. As price went up, it broke again the structure, meaning it validated the trend. The trend is still continuing. So when price broke the structure and went up, we expect price to come back and retest our order block, which is where we are right now. We want to map our order block and prepare for entry because price hasn't come to this place. So this is our order block, which is the last place reached by the price before. So I want you to mark this order block on your chart too, because this is where now we're preparing to take interest. Price is still at the new higher high. This is the new high, but we're expecting price to come back, retest this order block, then come up. So now our take profit will be at this level, at the new high. That's where our take profit would be, and our stop loss, let's remove this one, will be right below this lower low that level there. That's where your stop loss would be. You'd want to put your stop loss there if you have a big account, because remember, this is the 4-hour time frame. So this means that at this level it will be a lot of money involved. So I'd put mine here so that if my stop loss is hit, I can always look for entries below if this trend still continues. So this is where we are anticipating for us to have entries with this as our stop loss, and that is our take profit. So let me remove this line. That was our resistance where price kept coming. So this is another resistance point again, which can be a support. Price can come back and retest only this area and go without us, but we'll still keep our order block in mind, because this is our demand zone where we are anticipating for price to enter. So this is my analysis for GBPJPY. This is what I'm expecting right now on the 24th of June 2025. So we want to see whether price will come back and we'll take our entries and see if we're hit, or we'll be able to take our take profits from this point up. So your stop loss is there to protect your account just in case your analysis is invalidated. But if your analysis is valid, you take your profits here. If you'd want to keep some, you'd rather close some and put your stop loss above entry so that you protect your funds and you do not eat into your profits. So that's it about our analysis today about GBPJPY and order blocks. Okay, one other thing that you'd want to take note of, it's on fair value gaps. The fair value gaps for this one will be from our order block up to this point here. That's our fair value gap. This represents price can come back and retest just fair value gap. And let me change color on this one. This one is not really. Okay. Something is misbehaving here. Okay, this represents our fair value gap. So our FVG, this will be your imbalance, which represents a high movement of price. So there's an imbalance between buyers and sellers, meaning that not much trading happened because of the imbalance between buyers and sellers. So this then leaves that gap there where price can come back and retest this and not retest our order block. So you should always plot your imbalance as well, your fair value gap. But I like taking my trades from the order block. So for this order block that we put here, your fair value gap would have been at this one. This is your fair value gap. That's where your imbalance was. Okay, let me just change the color so that it's more clear. Okay, so this was your fair value gap. This is representative of the imbalance, where there's an imbalance between buyers and sellers, and then there's a void, there's a gap left in the market that the market can come back and retest. So at times the market can come back and just retest the imbalance, the FVG, and not retest your order block. So you need to be aware of that as well. But I like trading retests to these order blocks more than the FVG. But you can always enter here, but then that widens your stop loss because your stop loss is still right at the bottom here. But if you practice proper risk management, you'll be able to fare well. You'll be able to take your trades well. So That's it about our order blocks and the fair value gap. Looking at this one here, let me just do another one before we finish. Okay, where we had our order block there, this was our order block, this bearish candlestick here. Then our fair value gap was representative by this area right here. This side we had a smaller fair value gap there. That was your imbalance. At least this one is small, even if price can retest this, but still your stop loss would have to be right below this side. So that's it about your demand zones and your fair value gaps and your order blocks. So order blocks are also representative of your demand zones or your supply zones, where price is most likely to come back and retest. Price normally retests order blocks. It does in FVG imbalances. Remember to backtest and look for these order blocks, the demand and the supply order blocks, and find how price acts in relation to this. Till next time, ciao.